Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 29th day of October, and this is the Daily Report for Gold and Silver. Information came out about a GDP for the third quarter, which was quite optimistic when compared to last month, where we saw a contraction. We will cover that in detail, looking at a couple of charts and seeing where we believe gold and silver could trade to. But first, to the price board. Today, the Bureau of Economic Analysis, which is part of the U.S. Department of Commerce, released their latest numbers for the gross domestic product third quarter of 2020. It is an advanced estimate, but it shows from going to a negative growth in terms of GDP. They compare it to the prior month to an extremely positive move to the upside, because when we look at current data, we can see that the annual rate of 33.1% in the third quarter, when we compare it to the quarter prior to that, which came in as a decrease of 31.4%, was an impressive number. It did affect the dollar. The dollar had tremendous strength, gaining over 0.5%, and that, of course, transferred over into gold. Gold is down 0.6%. The dollar is up 0.54%. The differential of 0.6% represents some fractional buying in gold today. Again, 1867.90. Silver also had a decline today, but the decline was nowhere nearly as great, and that is because of the industrial component of silver. Spot gold had gains today, 168.3546. That is our current print. And the two ETFs that we follow are SLV and GLD. GLD gave up 0.4%, 175.40, and SLV gave up a little bit less than that, 0.3% at 21.70. Let's take a look at our technical studies. The sell-off in gold over the last 2 days has a very common theme, and that theme is dollar strength. In the case of yesterday's price action, what we witnessed was a devastated U.S. equity market, with the Dow losing over 900 points, a flight to safety, and that flight to safety was to move equity dollars into cash. Today, it was a report that came out showing a definitive growth in the gross domestic product over this month's period when compared to last month. Last month we had negative numbers. This month we had growth from those negative numbers. The key is this: we have an election that is set to take place on Tuesday next week. We're a few days away from that. The outcome of the election will give market participants great insight as to the breadth and the expenditures that are passed by either a Democratic or a Republican administration. However, there is a caveat with that, and that caveat is, regardless who wins the election, there will be some sort of stimulus bill passed. It's greatly needed. It's a matter of how much money will be allocated. From what the polls have shown, even though Biden is ahead currently, the takeaway is that what most people are hoping for is, regardless of the winner, there is a peaceful transition of power come January, and that the election results are not contested. When we look at this daily silver chart, a couple of things become immediately clear to me. First of all, we have identified what we believe to be a strong area of potential support. That comes in at 23.05. You can see that the low today dipped below it, but it closed just above this area. If this area holds, we could expect to see the market once again move back up the channel, with resistance once again at about 25.77. However, if we see the market unable to hold this particular support level and price point, then we have to plot the next logical level, which is a 50% retracement. Retracement, of course, is going from March's lows at $11 up to these highs this year at almost $30, and that number would come in at approximately $20.75. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.